So we have an awesome treat for all of our listeners today. We have Paul Ryan, the founder of Simply Ask It, in the studio today. Really excited to talk to you, Paul. Thanks for being here with us.
No problem. Thank you. Thanks for having me.
So maybe, Paul, it would be awesome to start with just introducing Simply Ask It and how it works and
Sure.
the story behind it.
Yeah, absolutely. Well, Simply Ask it's an educational marketplace. So it's powered by a Q&A. It's a question and answers. So users are able to, at their own convenience, jump on at any time and ask any question they'd like in relation to home loans, finance, credit cards, insurance, superannuation, financial planning. There's real estate, legal questions, business questions. So any of those questions where they're sitting there, everyday questions, people ask these type of questions every day. Sometimes they're not quite sure who to ask. Unfortunately, not quite sure who to trust. So at their own time, 9 o'clock at night, a glass of wine over a beer and just simply ask the question. And then that question then sits on an open platform, which allows a whole range of industry experts, mortgage brokers, bank managers, real estate agents, and a whole range of others to answer questions. And it could be 1, 2, 3, or 4 answers that they receive in the next 24, 48 hours. So it's a real convenient platform to ensure that users get the right advice, helpful answers. But equally as importantly, it allows them to identify who are the best experts in the marketplace, because you can really see the quality and the expertise of the experts coming out in their answers. And if they like the expert and the way that they're communicating, their tone and their expertise, they can then make contact with them. So it's a real one-stop shop in terms of being able to ask the questions when you're ready. So many people, they get home and think, oh, wow, I didn't call the bank manager, or people aren't returning phone calls, or people don't know who to call. So here's now a platform they can just jump online, ask the question, and they'll get answers within 24, 48 hours, which allows them to make more informed decisions.
And you mentioned the experts could be, brokers and things like that. Do they have to be verified? How do you be an expert to get on this platform?
Yeah, so the experts out, there's hundreds of thousands of experts. So it's a range right through from accountants, lawyers, mortgage brokers, real estate agents, financial planners. They have to provide and acknowledge and warrant that they are an industry expert, that they have the qualifications, the licenses, the permissions to be able to participate on such a platform. We don't go in and find out all their exact details of their qualifications, because it's their responsibility to make sure that they are fulfilling their licenses. The key thing about Simply Ask It is information is on a website. It's black and white. You can read it. So therefore, there's a fair chance information is going to be 100% correct. So therefore, it's transparent and it's independent. So users can feel comfortable with the information they can act on. And also, because you can get multiple answers, if the first answer or second answer isn't necessarily 100% correct, other industry experts can come on and rectify that situation. So behind closed doors, we never know necessarily what's going on, what's been discussed. But here is now, because it's transparent, people can read the answers and say, well, is that 100% correct? And other experts, because they're tired of all these headlines, Australians don't trust financial planners, don't trust mortgage brokers, don't trust real estate agents. So they're very protective of their own industry. What happens then is you may get 5 answers and a bit of debate amongst the industry experts. The key thing there for the user, the consumer, is they're getting the right advice.
Right. And what was the story behind why you came up with Simply Ask It? Obviously, it's an awesome idea and it's really useful. So how did you think that was something that could be useful?
Yeah, I've been in the mortgage game now for 25 years, so I've been around the traps a fair bit. And I talk to people a lot about, I like asking questions, so I talk to people a lot about why don't they know the interest rate on their home loan and who is their mortgage broker. And unfortunately, there was a lot of answers coming back where they were saying, well, I haven't spoken to a mortgage broker for 2 or 3 years. I actually can't remember their name. I don't know how to contact them. Someone may have left an industry, a real estate agent may have left an industry, financial planner may have left. So people are really unsure of who they can ask their questions. And I get frustrated when I hear 80% of people don't know the interest rate on their home loan, because they could save so much more money. So I wanted to make it easy. I wanted to make it easier because when you're not sure of a particular subject, or you're not sure, there's no such thing as a dumb question, but unfortunately people think, oh, that's a dumb question to ask. There is no such thing as a dumb question. So I wanted to make it easier and convenient for people to just ask the questions that they wanted to ask and ask them in their own time. So that was a light bulb moment for me a lot when I found that people weren't quite sure who to ask and who to trust. That had a bad experience. And equal as importantly, I always believe that people not only deserve access to the right advice, but they deserve to be being able to identify and access the best experts in the marketplace. Unfortunately, we have some tremendous mortgage brokers, real estate agents, financial planners, lawyers. There's some brilliant people out there, but unfortunately, there's others that probably need to improve a little bit. And when you're dealing with financial advice, when you're dealing with big decisions, buying homes, home loans, superannuation, for example, you want to know that day one you're getting the right advice. You don't want to be finding out after the event that the information you were told wasn't 100% correct.
That's right, yeah, because then it could be almost too late, or it might be, yeah.
Do you think there is a lot of confusion around, obviously you were saying, you know, a lot of people don't know their home loan interest rate. I mean, you know, looking at your platform and looking at the questions that are being asked, do you think that generally we don't have a good grasp of financial products and services, or do you think generally, you know, Australians are pretty good and we're asking quite insightful questions? What are your kind of thoughts on that?
Everyone's going to ask insightful questions if we've got a platform to do that. Unfortunately, we have a little bit of a set and forget mentality.
Yeah.
There is a little bit of apathy there. Yeah, I've got my home loan, I can meet the monthly repayments and so forth like that. But there is that apathy there, and that's why. I mean, it can be confusing. I mean, superannuation is a confusing issue for me.
Yeah.
And I've been paying super for many years, so that's still confusing. So I think where the benefit of Simply Ask It is not only the opportunity to ask questions, builds confidence. And I always use the example, if I want to buy a car, I'm an impulsive buyer, I just want to get in and get out pretty quickly. And the salesman or salespeople, they can identify that.
Right.
And they say, well, we've just got a quick sale here. But if you go in and you can ask questions on a platform that's completely independent, there's no judgments, and you can use that information. You walk into the car yard and you ask a couple of rich questions, all of a sudden, like any salesperson, they go, okay, I'm going to have to do my job here today. I'm going to have to work hard to make sure that I cover off all the answers, to make sure that they're comfortable before they go and buy that car, buy that property. The key with Simply Ask It is you don't necessarily have to be the one asking the questions. So I may ask a question today, but someone in Perth, because it's an open community, it's not like LinkedIn, it's not like Facebook, they're gated, and you can only see information when you're connected with somebody. So I could ask that question here today. Someone in Perth, Brisbane, anywhere around Australia can actually read that question and go, well, that's relevant to me. I'd like to know the answer to that question. So it doesn't mean that you have to be a participant and a user to ask the question, because it's an open community. Everybody can get access to it. So a lot of us these days, we jump on Google, and that information is fantastic, and it's a great research tool. It's a little bit different to the Encyclopedia Britannica that I had when I grew up. But so people, we're used to jumping online, but a lot of that information is then followed by self-interest. Like if you look at if you talk about home loans, so you'll see the top 3 or 4 is the National Australia Bank, the Commonwealth Bank, the ANZ Bank, and the like. Whereas with Simply Ask It, you're actually getting real-time data. So if there's a change to interest rates on the 1st of July, well, then that becomes your question after that becomes relevant. If there's a change in the tax system after the 1st of July and you ask the question in October, you're getting real-time data. You're not getting answers that are back in 2014, 2015. And that's the other great thing about it, because these experts that are answering the questions are acting in real time.
Do you think, linking with what Liz just asked before, do you think that there is something that should be done to increase the amount of financial knowledge that Australians have, in the schooling system? Like we often talk about how we didn't really learn about financial products in school, and we're really only learning about them now.
Yeah.
Do you think that that's
absolutely
true?
I've been an advocate for that for many, many years. I mean, I even wrote to a member of Parliament. It was about 10 years ago, and it was just a roadblock. It should be through the school curriculum. If there's one subject at school that you need in every day of your life after you leave school, it is to do with about finance. It is to do about personal loans. It is to do about credit cards, interest rates, home loans, buying property, your superannuation. These are things that you actually deal with. I mean, I've got a couple of teenage kids, and we talk about their homework, and I'm looking at it and going, yeah, I learnt that when I was at school, and I have not touched it for 20 odd years.
Exactly.
So this type financial literacy in the education department, it's got to be there, because too many people are getting into trouble. They come out and they leave school and they want to go on a holiday, they want to go on a gap year, and that's fine. The first thing they do is get a credit card. It becomes $2,000 limit, then it becomes $5,000 limit. All of a sudden, they're in a little bit of financial difficulty, and that could have been alleviated by educating them.
Yeah. Yeah, no, I 100% agree. And do you think, like, do you have any ideas around how that would look like, or do you just think it should just be like a subject that's taught, in school?
Well, I think it should be a subject that's taught. It's equally as important as English and maths.
Right.
As far
Yeah.
as, well, it is a bit of maths, but it is equally as important because it is a subject you are dealing with every day of your
Every
life.
single day. Yeah.
Yeah.
Another question I had, Paul. Sorry, Liz. I'm hogging. Is what do you find are the most common questions that guys get asked on Simply Ask? Simply Ask It.
When we launched just around financial services, so home loans, superannuation, personal loans, credit cards, and so forth. So it lends itself to most of the questions are in or about home loans. We've launched that product, the platform, out to include other categories such as real estate, insurance, business, bookkeeping, accounting. We've just launched yesterday retirement and aged care, jobs, careers, and HR, and also travel.
Oh, wow.
So they were launched yesterday, which is exciting. But at this point in time, most of the questions are around home loans, first home buyers. There's a lot of questions in regard to super, financial planning and retirement, like a lot of people over the age of 55, 60, they're getting to a stage where they want to cash in their super, and is it the right thing to do? And if they do, what happens to their tax? Like, what are the tax implications of that? There are also a lot of questions in and around business, setting up a business.
I did notice that, yeah.
PTY Limited, or do I just get an ABN number? So they're the three main categories that people are asking questions about at this point in time.
That's awesome.
So what are some of the questions you're seeing from first home buyers? Is it around eligibility, or is it around deposits? What are we...
Yeah, the whole thing.
Yeah.
It's what sort of deposit do I need? Eligibility, serviceability, government grants, all those type of things from a first home buyer. And also, so you look at, for example, if we be specific, Bill V, who was on the platform that's given us a testimonial, he asked 8 questions.
Oh, wow.
In preparation to apply for a home loan. So he wanted to know, in terms of, do lenders look at employees differently to contractors? What are the implications there from a serviceability? Mortgage insurance, how much is mortgage insurance? Is there a way to alleviate mortgage insurance? Principal interest versus interest only. What if you pay more of your repayment earlier in the month than later in the month? So all these type of questions. So what he was doing was arming himself with all the answers, building his confidence. So when he went and sat down with a broker, he had all these questions that he wanted, that he had information, and it made things a lot easier for him. And pleasantly, he went and bought his property, and he's pretty happy.
That's awesome. And do you find that a lot of users that come to Simply Ask It ask one question, they ask multiple questions, or how does that usually...
It varies. Some people are inquisitive, some aren't. Some people just ask one question, others will ask multiple questions. There's a number of them that have asked questions over a period of time, so they come back and ask a question because they've thought about something, so what about that?
Right.
And also different categories. They might ask a question about a home loan one day, and it could be, well, what are the best questions to ask a real estate agent the next? So again, they're just arming themselves with information free of charge, and timely. The turnaround time is within 24, 48 hours.
Oh, wow. It's that soon.
Yeah,
That's awesome.
absolutely. I get quite a thrill when I see somebody ask a question and they get 3 or 4 answers in the space of about an hour. And you look at it and go, where else could you get such great industry expert advice for free in such a short period of time? Normally we're on the phone, we're waiting for phone calls to come back to us. People aren't returning phone calls. We've got voice messages. And you get frustrated. But so I get a real thrill when I see and some of the answers are fantastic. Some of the experts on there, they're thorough. The key thing with their answers is that not necessarily, they don't have to go into specific detail. And more often than not, they can't go into specific detail because they don't know all the details about an individual.
Right.
The individuals that are asking the question, we need to protect their privacy. We don't want spam. So they only have to put in their first name and the initial of their surname, so they're protected. But when they're asking the question, they're taking that information and using it in a manner which helps them make the right decisions.
That's awesome.
And you've spoken a lot about home loan interest rates in the past, and I actually saw something where you were talking about the need for banks to guarantee home loan interest rates for new borrowers.
Wouldn't that be good?
Yeah. So I just wanted you to kind of talk through that a little bit.
Yeah, as I said, I've been around for a long time, and after the GFC was the first time we really saw banks move outside the RBA cycle. So the GFC caused all sorts of dramas for a lot of people. And we had a strong banking system, which is great, so we can't complain about that. One of the areas that I do have a serious issue with is the banks now are using any type of legislation or regulation that's get brought in to say, well, that's increasing our cost of funds. Now, is it really? And all of a sudden, next thing, as soon as you hear that, you know there's going to be an interest rate rise.
Right.
So there's two things new customers seem to get a better rate than existing customers because they move their back book. So if you're an existing customer, your rate goes up, but then they'll entice a new customer to come in, and they'll offer all sorts of things to win their business because that's just the way that they do things. So you're looking for an example in if you got an interest-only investment loan in October 2016, you've had 3 interest rate rises. So you've chosen this particular lender, and they've enticed you. They've come aboard. Yep, that's great. And I've believed you. I've trusted you. They want my business. For no reason, you've had 3 interest rate rises.
Yeah.
So I'm sitting there going, well, if you're going to entice me, then you've got to at least provide me with a guarantee. I think it'd be a great marketing tool for a lender to come out and do that. But all this, I mean, back in the GFC, the rates would increase. The Reserve Bank would increase rates by 25 basis points, and then someone would go by 38.
Right.
Then another one would go by 37, another one would go by 36, and then rates would come down, the RBA would come down by 25, and then they'd only pass on 10.
Yeah.
So that's one of the reasons why consumers and users don't necessarily know the interest rate on the home loan, because it was pretty hard work trying to keep up with where is my interest rate. And whenever there's a negative, you tend to resort into a little bit of a shell. So I'd love to see them come out and say, well, if you join us, if you're putting your faith in us as a home loan, we will guarantee that we will only move outside the reserve. We will only move your rate if the Reserve Bank moves your rate, because they've done all their pricing, they've done all their modelling, they know what's going on. I mean, you're dealing with some of the most smartest people going around, so they know what's going on. There's no reason in my mind why there's any they should be increasing rates outside the Reserve Bank, because there's just no need to.
Yeah, and so you mentioned, obviously...
They'll argue against that, but...
So obviously, there's some reasons why, the rates change all the time, and that's why people don't know their home loan rate. But obviously, something came out recently where some people didn't even know they were on an interest-only home loan. I mean, why do you think that is?
Well, again, it's that set and forget mentality. It's talking to their broker or their bank manager, and they do talk about interest-only loans and what an interest-only does in terms of your repayments. It keeps the repayments down, because most loans these days you can pay interest-only but still choose to make principal interest reductions.
Right.
So you can still set your payment on a fortnightly or monthly basis as if it was principal interest. It just means that if something happens, a rainy day or something goes wrong at home, or the children are sick or something, it just gives you that fallback position. So that's part of brokers, bank managers. That's what the loans are there for. But in terms of whether they know they're interest only, and some people do forget. Some people aren't sure of what their result was at the end of the day. They just wanted their loan, and then as I said, it's become a set and forget, and the apathy with that.
Yeah, I think it's really interesting, this set and forget thing. I think it ties into, home loans. I see home loans as well. They're quite a I don't have a home loan, but they're quite a complicated product.
You should simply ask a question.
They're obviously quite a complicated product, and I think, people obviously just kind of don't want to think about them. So I think it's almost surprising that so many people, want to jump onto this platform and really want to get into the nitty-gritty of it.
And that's great. And I'll tell you, there's some classic examples just in the past 12 months. And this is, if there's anything that comes out of this, it's and I've got a hashtag going, know your rate. It is so important. You can make one phone call to a lender, and I've got evidence, and as would every other broker, they would have evidence, as I said I have, where consumers have made one phone call to their lender. And I got a surprise one day myself when I rang on behalf of a friend of mine, and they had a significant loan. It was in excess of $600,000. The interest rate was 4.9, and I thought, oh, just let me see what I can do for you. So I rang the lender on their behalf, got the appropriate permissions to make the call, and I was expecting probably a 10 to 15 basis points drop in rate. They got a 70 basis points. So their rate went from 4.9 to 4.2 on the basis of one phone call.
Wow.
So this is where, if everybody knows their rate, and with all that fluctuations of what's happened with rates going up and rates coming down, the bank's not passing on, a lot of people don't even know. I've got a colleague who hasn't spoken to his bank for 10 years.
Wow.
So when you say, why don't people know their rate? There's a lot of reasons why they don't, but they really should, because one phone call today, your rate, and through the platform, you can see people asking questions, and a lot of answers will come in from the experts saying, look, your rate should be like 3.73. And they're sitting there at 4.2, and they ring the lender, and then they write back and say, hey, guess what? I made one phone call and I've just saved myself 0.5% on the interest rate. So as much it is a set and forget, as much it is that mentality of, it's okay, I'm meeting the repayments and we'll put it on the back burner, and as long as we meet it, we're okay. I don't want to think about it. It's a mortgage, it's negative, whatever those reasons are. Just people should look at their internet banking, their bank statement, make a phone call, and just ring their lender or ring their broker and say, hey, because the cost of acquisition, the cost of retention for a lender is far less than the cost of acquisition for a new client. So if you can ring them and get them to turn the dial down from, say, 4.4 to 4.1, well, that's in your best interest. So you can then make a decision about using those additional funds to pay off the loan more early or more quickly, or you could use the funds for what may be necessary purchases you need around the house or kids' school or whatever you want to use it for. You can use those extra funds at that time.
And what for someone who wants to do this, what is kind of one of the best ways to sort of go about doing it? So obviously you make the call, and then what kind of should you say? I know that sounds silly, but like what should you say? You know, like, I've seen rates of X% at other places, or should you say, like, I'm thinking of leaving, or what's the best way to do it?
A lot of people are asking that question on Simply Ask It, and as I said, they get the answers, and that gives them the confidence to make the call.
Right.
It's just simply ringing the bank and just saying, look, I've got my loan with you. I've been with you for X period of time. I'd like to think you'd like to keep my business. I'd like to stay. I don't necessarily want to move, but there are other options out there. I'm giving you the opportunity first to keep my business, and what are you prepared to do? And just keep it at that. If you're confident, and a lot of people don't make the phone call because they feel as though they can't.
Right.
They feel as though, I can't ring the bank. Can't ring the bank manager. Well, you can. You actually can. And there's a lot of evidence out there that you'll get a good win. And don't be afraid to be cheeky to them and say, look, hey, you've only come down by 10. You sure you can't go down by a bit more?
Yeah, so try and get as much as you can.
I mean, it's your home loan.
Right.
It's not their home loan. It's your home loan. It's money coming out of your pocket. It's your home. Why not try and pay it off as quick as you can? Or why not put some money back in your pocket?
Yeah.
The banks are making enough.
Yeah.
I'm going to get you to call.
I know, right?
I'll call, no problem.
I also had a question. So we're talking about home loans, and the fact that a lot of people don't know their interest rate. A lot of people don't know that they're on interest only rates. So what are some of the other? What are some of sort of the best questions that you've seen asked on Simply Ask It about home loans, and what should kind of people be asking when they are going for a home loan?
Well, it's all sorts. I mean, self-employed people are asking about low doc loans. How do I get a home loan? I'm self-employed.
Right.
People are talking about interest rates. People are talking about principal interest versus interest only. And what does it mean if I pay extra? There's a whole range, LVRs, maximum LVRs, offsets versus redraws. All those type of questions have been asked over the platform. So it's not specific to any one particular area because everyone's different.
Right.
Everyone have different expertise in their own expertise of what they know about a home loan. But it's asking the question that you want. And instead of sitting, and I wonder if that was the case, you now have a platform where you can just not worry about being identified as who's asking that question. You can just simply ask it and get that question answered.
And we should probably have covered this earlier, but I forgot to ask you. So for someone who is interested in going to Simply Ask It and making an account, I suppose, so what's the process?
It's the onboarding process is very simple. It's just your name, email address, and a password. You can then ask your question. You then put your postcode in, so we can identify, and the expert can turn around and say, well, that person's close by to me.
Right.
So it's all push notifications and geotagged, geo-targeted. So it's very simple. And then experts get the opportunity to answer the question.
That's awesome. And like you said before, it's free. It's a free service for consumers.
Yeah, absolutely.
So
and
cool.
Experts, the reason why experts are enjoying the platform is because they're getting ability to showcase their expertise on an open forum. There's not another platform out there where they can actually do that. I mean, they can put their marketing material and what they want on Facebook and LinkedIn, but that's a gated community because you have to follow them before you see that information. And they can upload content, they can upload blogs, videos, podcasts, they can write articles, they can put their marketing material on the platform. So it means that they're opening themselves up to a whole range of brand new customers, and people can identify and say, well, that's the expert that I'd like to deal with. So they're generating new business out of it.
Yeah.
I find it really interesting reading other people's questions.
Yeah, same.
And going through and seeing, I was like, oh, okay, that's actually quite interesting, because you learn about the intricacies of certain products and things like that when you're like, oh, I didn't even think about that, like that could be a problem, or that someone would come across that until someone actually asked that question.
Yeah.
Like, oh, okay, cool.
And that's where I was heading before. I got waylaid with my own thought process, but that's where, as I said, you don't necessarily have to give specific advice because you don't know the specific details, and through regulations you can't. But what you can actually say to somebody and say, look, I can't give you the specific advice because you don't know the specific details, but these are the type of things you should consider. And sometimes I read and go, oh, well, I didn't even consider that myself.
Yeah.
So that's the beauty of the platform. It's allowing you to think, allowing you to get information that allows you to consider other things to, again, ask better questions. And if we ask better questions right through from the day we were born, we were told to ask questions. For some reason we don't. And if we ask questions, we get better answers, which helps us make more informed decisions. It helps us save money.
Right.
Helps us buy a property at a better price.
Yeah.
It helps understanding what our super's doing. It helps us make better business decisions. It helps us make better legal decisions. So that's what happens when you ask questions and you get a range of answers.
Yeah. I did want to sort of touch on super. So superannuation is it's creeping up more and more into millennials' lives now because of stamp duty exemptions and also the possibility of, proposals like being able to dip into your super to pay for a deposit because the property market is getting so expensive. What's your thoughts on that? And are you for or against, something like allowing a first home buyer to access super to purchase?
Yeah, I'm a big believer for a number of reasons. I'm a big believer in first home buyers being able to access their super to buy their first home. You've got to put some parameters around it. So if you go to a 20, 22, 25-year-old person and say 10% of your salary is going to go into a super fund that you're going to have no control over, really, it's in someone else's hands, but you can't touch that money until you're 55 or 60 years of age, and you're only 22. You're not looking that far ahead, and it goes in one ear and out the other. So again, coming back to that financial literacy we spoke about before of educating people, if you then turned around to a first home buyer at 22, 25 years of age and said, right, your super contributions are going to go into a fund. Now, between the ages of 32 and 35, so you give them a time frame, you will be allowed to access those funds as a deposit for your first home. And they go, what? So in 10 years, I can pull that money out to buy my first home. And you might put some parameters around it and say, right, your employer will put a 10% into super, but you have to put a 1 or 2% on top of it.
Right.
So you set up some parameters around that. All of a sudden, the young kid turns around and goes, right, well, can I pay extra? How do I do that?
Yeah.
And all of a sudden, they may just take a bit more interest in the super at a younger age, where at the moment they're going way back. They're not even thinking about what's going to happen in 30 or 40 years. So it may just help them. Now, this won't help the super industry will be against this because it's all full of self-interest. Right. But you also, the people that talk about the smashed avocado and the millennials and all this type of stuff, they forget couple of very important points. If someone's back in 99, 2000, 2001, so that's 16 years ago. So if you've got a home loan when you're 35, you're 51 now, so you forgot what happened back then. But they had access to 100% home loans. They not only had access to 100% home loans, they had access to the first home buyers grant.
Right.
All right. So people that got loans in the 80s and 90s, now I've been around long enough since the 90s in this game. So you could go to the bank and the bank would say, you need a 20% deposit. I don't have a deposit. They'd send you, they'd toddle you off down to Westpac, they'd toddle you off down to AGC. ANZ would toddle you off down to Sander, and you'd get a personal loan for the 20%.
Wow.
So yes, a lot of people did save the 20%. As they are at this point in time. But those that didn't, they tend to forget that when they got the home loan, they either got a home loan at 80%, personal loan to cover the costs, or they got a family loan. Mum and dad helped them out. So that's been happening for many, many years. So I just think with the way the property market is at the moment, the cost of living, that we really do need to look at something in terms of the first home buyer. So if you get a first home buyer who at 32, 35 years of age, that is able to access a super and buy a property. And let's say they buy a property for 500. That property might be worth 560, 600, 700 as time goes by. Yeah. Gets them in the property market, allows them to buy and sell, upgrade, buy investment properties because it created some equity. Now, come the time when they do retire, they're still paid. They've still got their super coming from the age of 35. They've still got another 20 years. It may mean they're less reliant on the government because they got into the property market earlier, right? And they got the benefit of the property raising prices, greater equity in their home loan and into the property, so that they're not so reliant on the government and the pension and so forth like that, because they've taken an interest at a much younger age. I think it would be a great idea. We need to do something with super.
Yeah. I think it's an interesting concept, but the example you gave where if someone said to me at 22, in 10 years, we're going to help you with this deposit, I agree. I think I would have been like, oh, I'll put
Same.
extra into it.
Yeah, I think the problem
Yeah.
is that like you mentioned, Paul, like if you're going to be accessing this money in 30 or 40 years time, you get so removed from the fact that it still is your money, and you still need to worry about like where is it invested in, and are you going to be in a good position when you retire because of your super or not? So
Yeah.
Yeah, and let's not also forget, the superannuation industry is a very rich industry.
right.
There's a lot of people making a lot of money out of it. $2.3 trillion in super.
Wow.
Right, your fees of 0.65, 1%. So someone's making a lot of money. Now, unfortunately, we've seen the issues with financial planning businesses falling over. We've seen the banks. I mean, heaven forbid, even the banks have had the problems with superannuation. So here's a young kid relying on somebody else to invest their money wisely so that they may get a return in 30 or 40 years. Why not give them a little bit of control back into the process at an earlier age? Because it would increase their interest. So again, if you followed on from that, from the education in schools,
Yeah.
if we up the ante there, and then allowed a first home buyer to access their super, my question is, would things look a little bit differently in how much more educated and how much more savvy people are in and around their own finances?
Yeah, I'd be very interested to see that.
Well, I mean, will it happen? I don't know. It's full of self-interest, and the superannuation industries aren't going to allow it to happen because there's someone there earning $1 million a year running them, and the government, are they going to make that type of decision? And that's the unfortunate part, is that the governments are there, and you need leadership to come out and say, look, long term,
Right.
not short term, and say, well, if I make this decision now, will I be still in power within 3 years' time? We need somebody to come out and say, well, this is the right thing to do for Australia. This is the right thing to do for the community, the right thing to do for the millennials, the best interest for 30, 40 years down the track, not necessarily my interest of whether I'm still going to be in the job in 3 years' time.
Yeah. I mean, I myself only really got interested in super after chatting with Noel Whittaker on this podcast. So it was not that long ago. So
Well, I think that was that not the podcast where even then, I mean, was it the fat cats, the thin cats, or whatever it was?
Yeah.
And they only performed at 10%, where the market was performing at 20%.
That's true.
Yeah.
So let's not just think that millennials don't know how to use their money.
Yeah, exactly right.
Like others may not be using it as well as they could be.
Yeah. Well, unfortunately, Paul, we've actually come to the end of our time together.
Wow.
We still have heaps of questions, so we'd love to get you in
I'd
again.
love to, yeah. Fantastic.
In for a second time, because this was an awesome chat. So we just have our 3 questions that we like to ask each of our hosts, each of our guests, just to each of our hosts, just to find out, a bit more about them and how they, what they like to invest in and things like that. So the first question is, what do you personally like to invest in?
People.
People?
Yeah, I think, I mean, I was fortunate to be part of Wizard Home Loans right at the beginning, and that was an amazing experience. It was all on the back of having good people in and around. And I think if you've got good people in a business, and even if you're buying in the share market, it's back to the people within the business and how they're operating it. But yeah, people, good people. If you've got Wizard, we had one product when we started, and in 9 years turned it around and sold it for $400 million in 9 years to one of the biggest companies in the world in General Electric, and we started with one product.
Wow.
So it was just a group of people that loved what they did, and I always say every employee deserves a bit of Wizard in them, because the culture was fantastic. It was a great group of people.
Yeah, and I'd love if you get in, if we're lucky enough to have you in again in the future, I'd love to touch on that. But just quickly, what was your experience in that?
Oh, it was an amazing experience. It was right through, even now it's 10, 12 years, it's still part of you. It's still something that, you speak to millennial now and you talk about Wizard, and they go, who? But yeah, no, it was a wonderful experience. It was a great group of people right across the board, right through from management all the way through to the branches, the networks. I mean, to see 260 Wizard branches out there in a short period of time, and these people had come from the banks, and all of a sudden they were self-employed, running their own businesses, and starting off with a little $3,000 car, and a couple of years down the track they're buying Mercedes, and their kids are growing up, and it was just a great experience all the way around. It was a lot of fun.
That's awesome.
And the key lesson out of it was to have a go. I mean, that's what it was. It was simply, there was a right time, right place, and the opportunity came up, and we just said, let's go for it. So there was a gap in the market. We identified it. We made some money, expanded the products out, and went hard for it.
Yeah, it's interesting because I think we, like you said, it's sort of a little bit before our time, but back then the banking landscape was very different for
Absolutely,
home
yeah.
loans and stuff. There wasn't really that much competition, right?
No, and the margins were quite significant. I mean, when Aussie came in, they built a business on probably a margin undercutting the banks by about 1%. Aussie John will save you, and he did. It was an amazing effort that he went through, and we joined. We jumped on the bandwagon, and we were able to undercut Aussie from memory at the time. So the margins back then were probably 3% on the banks. Now, I don't know whether that's 100% right, but they were quite significant, and that allowed Aussie, Rams, Wizard and a couple of others to come in and say, well, we can do things differently here and we can really reprice it. And then it took a while for the banks to catch up. They've caught up now, so whether there's an opportunity for another Wizard to come out, I don't know.
Yeah.
But it was, as I said, right time, right place, and we shook it up.
That's awesome. Cool. Okay, so the next question, Liz, you want to ask it or do you want me to?
What's the worst piece of financial advice you've ever received?
The worst piece of financial advice. I don't know if I could, but having been in the game for so long, I don't know if there's one particular worst. But I've seen some bad advice, right through not only to myself but also to I've seen industry expert offer their clients some bad advice, and I've heard some pretty bad war stories. But again, I don't know whether it was the worst advice I've seen. I know the worst decision I've made from and that comes back to not backing the right people. Again, I come back to people as well. Is that I backed a group and didn't ask enough questions. I didn't do my due diligence on them. I didn't ask enough questions to find out what they were really like in terms of going into business with them, and that cost me.
That's a great response. And what about the best financial advice?
Property. Love property.
Yeah.
Yeah. No, it's it was drilled into me at a young age that a bit of land with a house on it will take you a long way. And I just love property because I'm a person that needs to see things. I'm not huge on the share market because not only lost a bit there, but I can't see it moving. I can't. Whereas property, I can drive past, I can see it there, and it's still there. So I've always had a love affair with property.
That's awesome. Cool. Well, thank you so much, Paul, for being in today.
No problem.
I've learned so much, and it's been a really awesome chat.
Thank you. No, it's good fun. So if you've got a question, what do you do?
Simply ask it.
Absolutely.
I'm actually really keen because I'm looking for my first investment property. So, I'll definitely be on there.
Fantastic. We'll look out for you. Make sure you get the right answers.
Yeah, beautiful. Thank you so much.
Thank you for having me.